The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. What do we have today? Volume's pretty good, 2.3 billion shares. Again, got some volume as we push down, lighter on the pushbacks up. But off 5 points, but we're up 5 points off the lows of the day, 6 points. Volume 2.33 billion shares as we start the show. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Wow. Anyway, what do we have going on today? Well, that's kind of it. We had kind of a pullback. A lot of people thought that they should buy it. Then it's kind of pulled back a little more. Then people thought they should buy it. 5 points is no biggie in the market. Probably, to me, the big news of today is that the dollar continues to trade like it's a dot-com stock in 2000. We're a little over 101. We're at 101.06, which probably, if you hadn't been paying attention last day, probably wouldn't be a big deal. But we got slammed all the way down to, 165 cents. And within a matter of a couple of bars, we're right back over 101. They tried to resell it down. That wasn't holding. We're going to be holding, it looks fairly decently in the 101s as we go into the weekend. This was a shortened weekend after a 3-day weekend. I learned fairly early on in trading from Tim Ward. He had kind of a theory that after 3-day weekends, if not the direction, certainly the temperament, the characters, the characteristics of a market change. There's a lot of thoughts about it. He, I guess, learned it from somebody. But it kind of makes sense after a 3-day weekend, especially in the summertime, where you go meet your friends and family. You come back, a lot of times you come back with a different view of the world, and you're feeling real good and you decide to buy a lot of stuff, or sometimes you don't feel so great. Aunt Marge was kind of rough on you and you decide it's time to sell. But it certainly seems like the characteristics of the market do change. I think we're starting to see that characteristic change right now. In the wintertime, not as big a deal as it is in the 3 major summertime 3-day weekends. But still, I've seen some significant changes in the way stocks trade, especially the way after hours. We've seen many stocks this week move higher right after they reported earnings, only to show huge downside the next trading day in the morning. The current earnings calls not quite going the way that a lot of people would think. But we've got some that are up, some are down. But it does seem to be kind of just almost a little bit violent. Everything's kind of balanced on a razor's edge, both short and long. We'll look at a lot of those stocks today. But we need to get the party started here, and that starts with history every day.
That it's all just a little bit of history repeating.
On this day in 1982, the first stock index futures began trading as futures contracts on the Value Line Stock Index, open for dealing in the pits of the Kansas City Board of Trade. Most people really don't know that options had been around for a while, but really never started to do anything because no one really knew how to price options. A Nobel Prize went to a couple of folks. It's called Black-Scholes, and you'll see the Scholes guy on CNBC from time to time. But they shared a Nobel Prize for coming up with an algorithm for pretty much at least coming up with a way to price options based on interest rates and recent volatility, a few other things. It's kind of a fairly deep number in there. But option market makers really didn't know how to make money. The 80s saw companies like digital equipment, but probably the big thing that changed everything were workstations from Silicon Graphics around this time, 1982, in that people could actually, or big hedge funds, trading firms could actually afford computing power on the desktop in front of the trader. There's a great documentary that runs from time to time, if you can catch it, on the internet before he makes sure goes after everybody and makes them take it back off again. I've had a copy. I've watched it a few times. But this gentleman, Mr. Tudor Jones, was, I think it was 85 or 86, sat in for a documentary from PBS. And he hated the way it made him look because he kind of wore his feelings on his sleeve, thought and forgot about the camera, and kind of acted like a madman, probably like many traders do. Unfortunately, they were watching him. After it ran, they made a bunch of videotapes so people could buy them. He made a deal with them, paid them a bunch of money, bought all the videotapes so no one would ever have it. But as all things out there on the internet, they still float around a little bit. Part of what I think he didn't really like people seeing was how much he used that SGI workstation in front of him for figuring out a lot of the stuff that he did. Computerized trading's not new. It happened in the 70s. But probably just about impossible to do options without computers in the Black-Scholes model, at least as a starting point to what you do. In this day in 1982, stock index futures began trading. And, of course, that led to ETFs that we all use and love and adore here at TFNN. Not much else going on in the news. As we said, just a lot of earnings. We'll go through some of those. But pretty quiet on Lake Wobegon, other than the fact we've got occasional drive-bys by the president. No tweets today that I saw of importance, but more, I think, about what's going on in the market. Dollar 101.07. Gold's up $6.50. Seeing a lot more people run for cover here as we kind of pull back a little bit. DLT 121.80. I thought we'd probably get back down to 116 before we got back up to 123. I still suspect that 116 level on the TLT is open and that we will get to it. Well, we're already into the break. When we come back, we're going to start looking at a lot of stocks that were moving on earnings earlier this morning. We've got some scans. We've got some advancers and decliners. And that'll probably wrap up the show today. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And question of the den and keywords for finding the Paul Tudor Jones videos. And you just kind of have to search on YouTube before. I think he has somebody permanently just sitting there watching these. And as soon as they go up, they may last a couple of days, and then they're taken down. But you'll see, I'm showing the YouTube thing here. Deleted video, deleted video, deleted video. They bust them up. They do all kinds of stuff to get them on YouTube. They're occasionally on there. I'll try to find something better out here, but it was in 1987, called The Trader, and sometimes you can find them. Sometimes, oh, there it is. Oh, no, that's something else. Now, anyway, I'll look for it. Maybe I'll find the link and I'll put it in the den on Monday. But very interesting documentary, but just very interesting how hard he worked to buy up all the videotapes and make sure no one saw it, because he didn't think it made him look good. Then he kind of became a recluse and never really did much after that. I mean, out in public as far as trading. He's quiet as a church mouse these days. Decided that it wasn't smart, I think, to go out. Kind of looked nutty. Anyway, what do we have out here? Universal Forest Products had some earnings. This thing just filled its gap. Not that much. A lot yesterday, a little bit more today. Kind of interesting to see that a forest products company not doing that well. Hear about Andy talking about the price of lumber, and I would think maybe something's afoot here. Why can't they make money when apparently lumber is going up? I don't know enough about that company to really speculate, but may have a little bit more time. A lot of stocks caught some people sleeping, as I said, either to the upside or downside. Earnings was AAOI. This thing gapped up with a huge sign of strength. If you go back and look at it, though, this is the second of a major gap. This thing gaps up again. I would be short it. But, man, you've got the first and second gaps The first gap's down here at 25. The second one, of course, is of today at 40 bucks. Third, you got a 3-gap play, and normally that just means that the thing is a Roman candle and fails fairly quickly. So keep an eye on that for one more big major gap up. You've got some minor ones out here, but you got a good idea how big this gap is here. What is this? 5 bucks. And it looks like it's about 5 bucks here today. So one more out there. So keep your eye on it. Might be very interesting. ACAI, gap down. KD Communication. We talked about this one a little bit. The last major low was February 1st with 2.26 million shares. We already have 4 million shares. This thing kind of went to a high, had a double top with about the same volume. Didn't give you a real clue. But kind of interesting on this one because this is the third gap down, fairly decent sized gap down on this one that still exists. So maybe this thing bases out around this $50. But my guess is it will take some level of consolidation before you want to do it. Baidu, I've not been hot on these Chinese companies. Everybody knows why. Do we need to say again, Bueller? Anyway, I'm not a fan of Chinese stocks. Companies may be fine. I'm always extremely dubious of the financials or their lack of there, and why we are not the best in the world. At least I think we're better than an incredibly horrible regulatory issue with Chinese stocks. Anyway, Baidu down on monster energy and volume on earnings. This thing kind of just looks like a bigger trading range back between 160 and probably this 197. So I'm not saying that this is dead or going to the dogs, just probably in a much bigger trading range that bounces around that 160 to 197 level. And I'm not exactly sure what will bring it out. I am fairly bearish on China right now in the next coming weeks. HCLP, High Crush Partners, they're diluting their stock. Why would they do that? They need cash, but it doesn't make anybody else feel any better that owned it last night. I think somebody kind of got the idea that something was rotten in Denmark yesterday with that candle. It was pretty nasty, but today it opened up a little bit of a doji. My guess is this is going to go to about the 1625 level. HLF had earnings after the bell last night. It's down a bit. I don't know if you can say a great deal about this other than another one that's in a big trading range. To me, this thing could get back down to $47.62. We've talked about GNC and some of these other supplement companies. And yes, Herbalife is kind of in that same boat, but they never really marketed their products like GNC did with the celebrity endorsements and a lot of the other stuff that they do. So probably a little less affected by that and more affected by maybe pyramid scheme laws. Don't see a lot in that changing, though. Not a lot of discussion about it anyway. But it's just kind of hard to see how this thing continues on. I think they're kind of a benefactor for all that advertising that GNC did and other supplement companies. Now that they're cutting back on what they're doing, Herbalife might have a little bit of a problem too. It's nice when you have competitors because they're advertising. It's kind of Coke and Pepsi, right? You get a little bit more notice when there's a little bit of a product going out there. That stuff's being kind of curtailed by regulation. Kind of makes you think that things are changing a bit. Hewlett Packard Enterprise, HPE. Down. Could have been worse. Could have been much worse if they just did nothing. I still think Meg Whitman is probably one of the top two CEOs in Silicon Valley. Doesn't mean that if someone hands you the captainship of the Titanic when it's half full of water that you're going to be able to do much. You may get a few more people in the boat. Hewlett-Packard probably has a decent chance. They are the one company that can go up against Intel and Micron with the new technology. There's no discussions about that right now. Hewlett-Packard is also trying to rev up what they do in the 3D printing business and make it kind of like the laser printer business with the cartridges. They've got some fairly fast ones. I don't think that that's actually moved the needle whatsoever so far on Hewlett-Packard, but still in the trading range, down on significant volume, and I think this thing could go back to probably the 2104 October 18th low out here, though. Like I said, I think it could have been worse. This thing could have been 18 bucks today. We'll be back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
IMAX had some weak numbers, but didn't seem to affect the stock today. Popped up nice, gave back about half, maybe not half, quite half of the pop up, but a pretty nice day out here for IMAX. This thing's just in a big trading range, though. Volume's not all that exciting. I think they're going to really have to get away from all these superhero movies and get into something that really is going to fill the theaters, and they don't control that. That's probably if I was looking at the business model with IMAX, in one thing is if they make crap movies, it doesn't matter how good they look. People are not going to show up, and that is the problem with IMAX. A lot of these movies are just poor. In fact, we've got the Oscars this weekend, and I was going through them. You know, there's some decent movies in there. In a year or two, am I going to say, hey, I've got to get, one of my favorite movies of all time, Usual Suspects? Am I going to watch that again? Are there any of these movies that I'm going to watch or want to watch in a year or 2 years, or is watching them once good enough? Hacksaw Ridge, watching the first 15 minutes or whatever of the battle scene is probably enough, especially since it's a 1 hour scene of just the beach of Private Ryan. Instead of 10 minutes, it's 50. It's a whole hour of it. So a lot of blood and guts, a lot of other stuff. They are, you hate to be the company that is beholden to yet another industry that may be making good or bad choices. And that's it. I just don't see the really big move out here. Where's the last Forrest Gump where you could go watch it anytime it's on TV? You say, oh, I got to sit down and watch 10 minutes of it, and an hour and a half later the movie's over. They're just not that many lately. They're all blow-up movies. Something blows up, and then something blows up, and then somebody shoots something, and then something blows up. Not a lot of stuff. In fact, I was still watching Tinker Tailor Soldier Spy last night again. To me, that was 10 times the movie anything that came out this year. Although there were some good movies. I just don't think that there were anything that was that good. I look at that movie and I think, here's the murderer's row of the best British actors of 2013 or 2012 when that came out. Is there a movie like that where everything just doesn't explode or blow up? That's got a script, that's got an interesting story, and it's not. It's, I guess IMAX has kind of become the roller coaster, right? Where you get back on it, you may go get on it again for the thrill, but in a movie, it's just not like that. You don't jump back on the roller coaster again. You've seen it, you've done it, that's it, one and done. Anyway, my theory on that. Yeah, Mel Gibson does make some graphic movies. But even again then, I think I could watch, if I was on a desert island, I wouldn't have any problem watching Braveheart a couple of times a year. I think I would have a problem watching Hacksaw Ridge. But Mr. Kobayashi, oh, yeah. So that's it. NTES, this thing was kind of bouncing around this morning after its gap up. You kind of have to watch this one come back. 270 is what you're looking for to buy it. So if you're thinking that markets go higher this year, there are some of these stocks that had some valid breakouts and then back in. Oclaro did go higher and break out above this $10 level on the 14th of February. Had a little bit more volume, about 14 million shares. But again, a lot of these are just not reaching escape velocity. This came right back down. Looks to me like it's headed for 850. The big winner out here is OLED. Had a monster amount of people short this thing yesterday into earnings, and they were on the wrong side of this thing. Opened up at almost 74, went to 82.50 today, out there at $80. I don't think a lot of people know just how many of these OLED displays have failed in the last couple of years. I don't know how much they're impacted by it. I'll probably need to find out more about this company. It had some pretty ugly days back in January, but it continued going higher. That's all that matters. Restoration Hardware, another stock that had been beaten like a redheaded stepchild, did step out of the out of the fog and into the sunlight. Again, a lot of these stocks just way too short. This one, I think they were betting on Armageddon. A nice pop up, but just too many. I think about maybe 36 bucks where this double gap is would probably be where you want to look at this thing after all the shorts have covered. Maybe pull the trigger there. I wouldn't be short betting on the end of the world, but probably in a lower trading range, I would imagine. Splunk, the data mining company, this one had been up with some decent volume up to the highs, so wouldn't have seen a lot. Energy off the low, December 30th low was pretty good. You just didn't have a lot out here to say that this thing was going to roll over hard. It did, and maybe got maybe half of that back today. Still a company in machine learning that's very hard to describe what it does, but it's like a splunker, like a miner. Almost all these guys that are in this sector have something to do with miner. I mean, the software I use for machine learning is called Rapid Miner. There's a free version of the thing. And I'll just pop it up here. It's kind of interesting, actually, but most of these people are offering some kind of front end like this to their customers. And you can do some fairly interesting stuff. This one, you basically drop a bunch of operators on the screen and build up your model. Let's see if there's anything interesting here. Utility extensions, read database, application, cloud storage, blending. I won't spend too much time on it, but a pretty good program if you're actually looking to learn into machine learning. It's at least the beginning version of this thing is free. So if you want to learn how some of these techniques are done. Anyway, most of these guys have some kind of metaphor around data mining. Splunk is just like that. You got two nice gaps down here. I would think that maybe down around 59 bucks, this might find its first level of support. But again, this is a fairly recent IPO. Their earnings are extremely lumpy. I don't think I would be holding this thing through earnings ever, but might be an interesting trade. Constellation Brands, it's got a little pattern out here that you sometimes call railroad tracks. This one needs to be a little bit bigger, but we'll take a look at this when we come back. Time to give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, what else? We're going to go and look at OHI when we come back, too.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we were looking at Constellation Brands out here in almost railroad track. I don't think we talk about this very much, but if you get two candles, one up, one down, or one down, one up, but they're almost the same size, big ones. Some people have called them railroad tracks before because they kind of look like railroad tracks if you do just the bars out there. This one's kind of close. Still a little bit on the inside out here. I just haven't seen many in a while. They used to present themselves a lot more, I think, in previous markets, but kind of interesting out here, but fairly decent reversal on Constellation Brands. Again, all these companies are trying to buy one another out. It's pretty incestuous. I don't know if you can make a great deal about it. I just like that pattern. What else do we have going on here? We'll go through some of these. Oh, forgot. Got an email, so we need to get to those. OHI, which is Omega Healthcare Investors. Not exactly sure what he was looking at here. Buying it in the 401k. This is Warren from Denver. Leases nursing homes to operators. Does it change? Looks like a growth stock with yield. Okay. You got this huge down day. I don't know. I don't see anything in here. And to me, this thing is much more likely a giant, and I mean giant, asymmetrical triangle. So I would wait for this thing to break out and fade whatever move this thing has. But I think you could start with the September 7th high of 2016 and go down to the November 10th low and just put a big greater than symbol on this thing out, kind of sloping down more than up. And say, you know, if this thing breaks out to 35 or gaps up to 34.50, look at this thing as a short. If it gaps back down to like 29, it's got no volume, maybe even as much as 30. This thing breaks out, really doesn't have anything. That's probably the only way I could go long this thing. I break down, have no volume, get down to about 30 bucks, maybe 29. Even then, you got to watch out because you could go to 28.11. That would be the best buy, that November 10th low tested on lighter volume. But I don't know if you're going to get it. A lot of times these things just do a head fake for the first move. So if it goes higher, I'd probably pass on it. If it went lower, I'd try to see if there was anything out here. But high 29s, 30 bucks. This thing could kind of get back down here in any pullback. I think that would be kind of interesting. You can email me at path@tfnn.com. Some people were emailing me about NVIDIA. NVIDIA was lower and kind of came back a bit today. Got down to $95.70. Not a lot of volume out here, but what happened was when this thing was plowing around at about 96 bucks, one of the big men of the street that was short this from Citron, I think his name's Andrew Left, went in and basically covered a pretty big short that he had put on back up at this high around February 7th. So he made some money, but I think he bought like half the market all day long on this. I don't know why he did it. I saw that he was on TV earlier. He was also trashing Mobileye, MBLY. I don't know if it did so much so far today or what he sees on this one. All I remember was reading that he said that they were bringing a knife to a gunfight. Of course, another great movie anachronism. You back up to this double gap. I don't know, maybe that's what he's looking at. It went through it the last couple of days. It's back in it. This thing has a double gap just above the $46 range. Yeah, $46 range. But a nice double gap. The first gap is on August 23rd of last year. The next gap came on the 12th of September on the downside. But that 46 area is pretty right. I don't know. I have a feeling that the whole market is way, way, way down the road on self-driving cars, and it's probably a 2022 thing. I think a lot of people are thinking these things just pop out like a toaster. You just put them in there, they pop back out. It's going to take a lot of regulation. What's the law if the thing runs into somebody? Do you get charged? Does the company that owns the car get charged? I mean, the legal issues are just now even starting. So, as far as all the self-driving car stuff, everybody and their dog is in this business, from Apple to Google. They're all building their own chips. You got Intel coming up against you. I can kind of see where he doesn't think a lot about this. I don't know if this is the right time to pull the trigger on it, though. Still seems a lot of people are more than willing to sell the sizzle and not the steak. But we shall continue. Give me a call at 877-927-6648. Email me at path@tfnn.com. And I don't know what else we'll do. Let's check in on the markets here. 2358, volume still fairly decent for a Friday. I was kind of thinking we might have a low volume, a very low volume plop lower, and then maybe even continue that for the next couple of days. But even though we're not down very much, volume is still very. I had one of the best and biggest. I think we had almost 660 million shares in the first 30 minutes today on the NYSE consolidated tape, and that was very strong. Most of the time on down days, we're like 420 million shares or something. So today was we found a lot of people, a lot of action out there with people either buying or selling. Of course, you got to have a buyer for every seller. Let's go through a bunch of these. AIG, of course, had earnings. Let's check in with this one again. Kind of coming back up into this gap. I would have liked a little bit, if you were going to pull the trigger on this one, I would have liked about 65.25. You still might get that. But to me, I want to see about half the gap filled before I pull the trigger to the downside, to the dark side. AK Steel, a lot of these steel companies still kind of reeling. I don't think this one really did enough to count it as an ABC. But certainly you want to see how volume comes in on the February 1st low on AKS. That's $7.60, 30 million shares. And you only have about 13 million today. So you got a little farther to go. But we are certainly back down to that February 1st low with lighter volume. I don't know if I would go all Frogger on that, but it's interesting. See what else we have out here. Amphenol, market vectors, and H. See what else we have out here. Take a look at these real quick. Maybe you find something. Aris International, ARRS. Let's do the. Going to break. One segment left. We'll come back with Aris. We'll look at this company, tell you what it does, and we'll look at it.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Aris International, of course, an internet stock. Just kind of waiting for this thing to come back into its gap. Unfortunately, it came down with way too much volume. But this is kind of where you were going to be looking for support anywhere with this thing gap back up on the 28th. You got a little bit more of it. Could you get a bounce in it? You could, but it would depend on the market, so I don't like it that much. Got a question to take a look from Sean. It doesn't say where he's at, so I'm saying he's from Lutz, Florida. Sean wants to look at Twilio. You tried to go into the previous high of December 22nd that had 11.6 million shares with 8.6 million shares. So And it could have gone a few cents higher, but I'm saying that that's probably a failure up there at the $35 level. Your support would probably come around $29.50. And where you'd really love to buy this thing is at the January 3rd low at $25.98. I just don't see a lot more than a big trading range. I don't see this thing blowing out the lows, but I don't see anything, again, more than a bigger trading range come out here. This could be kind of interesting. You got, you had the August 15th high at 66.40 with 22 million shares. You got into it with September 28th without the volume, and then it kind of rolled over. So you hit 22 million shares. You got into it with less than 7 up here at these highs, and that's where it's all falling apart. Normally, you see how long this thing came down, and you want at least that much time, how many days, whatever this is, 25 trading days, 30 trading days from that high back down to the November 8th low. Just figure you're at least going to get that with any consolidation after something's been creamed like this. So you may be looking kind of nice. I would love for this thing to come back down to about $26, have all the volume go out, go sideways for a handful of days, and that would probably be a pretty sweet setup. But you may have another month to go to get this thing to set up and consolidate out and have some nice low volume, especially if the market pulls back and this thing has some good support at that $26 level. When the market's ready to turn back up, this may be a very nice setup. $44 and $60, you got some nice gaps that could get filled. So, and keep an eye on it, but not a lot much more than that happening. Let's see what we have time for. I wanted to look at a few more. Somebody wanted me to look at Microsoft. I haven't seen anything going on in this one for a while, just kind of going sideways. You had earnings kind of sold off a little bit. You're just going sideways in this one too. Again, this thing kind of looks like it's been a little bit of distribution several times. Each time it's kind of gone a little higher and then gone sideways a bit. But I don't know. I really don't know if there's anything else. I was writing the Tech Insider today. I was kind of thinking of this. I didn't write about it. But what is the next big thing in Microsoft that's actually going to push them higher? Well, they've got some good businesses, but is there anything that's not just incremental? Is there any revolutionary technology that they have? They put off a couple of things that would be revolutionary into 2019 that I covered in the newsletter today. But to me, it just seems kind of more of the same. Not a bad company, wouldn't short it, but I just don't see a lot out here to hang your hat on, at least for a trade. As always, we will see you Monday, same bat channel, same bat time. And give yourself an opportunity to sell when you can, not when you have to. We'll see you Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.